SpaceX had one of the biggest market debuts Wall Street had ever seen, and Elon Musk briefly became the first trillionaire alive. The stock ran from its $135 offering price to almost $226 by June 16th. Then it fell. By June 22nd, it was back near $154, down about 30% from that peak in a matter of days. Musk's trillionaire status was gone almost as fast as it arrived. If you have only seen the headlines, that looks like the whole story. A hot stock that ran too far and snapped back. It is not. Because the two events that actually decide where this lands and where your retirement money lands with it have not even happened yet. SpaceX has two things built into its listing. One brings in automatic buying. The other opens the door for insider selling. Neither has fully played out yet. And the gap between them is where ordinary investors get caught. If you have a 401k, an IRA, or a Roth, you are standing closer to that gap than you think. First, be clear about why it dropped. Options trading opened on June 17th, so investors could finally bet against it. The company announced a $60 billion acquisition and moved into the bond market for the first time as a public company. And the whole artificial intelligence heavy market wobbled at the same time. That is ordinary volatility. A stock priced at $135 ran to $226 and gave a chunk back. It matters, but it is not the main issue. The main issue is still ahead. Look at the buying side first. Back in March, Nasdaq adopted a new rule it calls fast entry, effective May 1st, about 6 weeks before SpaceX listed. Under the old rule, a brand new stock had to trade for roughly 3 months before it could join the Nasdaq-100. That wait gave the market time to figure out what a company was worth before the index money arrived. Fast entry cuts that wait to 15 trading days. So, around July 6th, SpaceX can enter the Nasdaq-100. That matters because Nasdaq-100 funds and exchange-traded funds are built to copy the Nasdaq-100. Their job is not to decide whether SpaceX is cheap, expensive, hyped, or already falling. Their job is to hold the companies inside the index. So once SpaceX enters, the algorithms running those funds have to buy SpaceX shares to copy the list perfectly. No human choice. No value checking. Just pure mechanical buying. QQQ alone holds around $430 billion, and hundreds of billions more sit in funds just like it. If SpaceX enters the index, that money has to make room for SpaceX too. The 3-month wait was the one protection an ordinary investor had. The window where the market argued over the price before the automatic money showed up. Fast entry shrinks that window to 3 weeks, and the small share supply makes the buying pressure stronger. SpaceX did not release most of its shares to the public. Only a small part is available for normal investors to buy and sell. There is also a quirk in the math. For a company with a float this small, Nasdaq can weight it at up to 3 times its available float. So a roughly 4% slice can land in the index closer to 13%. The forced buying is sized bigger than the stock that is actually for sale. So if Nasdaq-100 funds and exchange-traded funds need to add SpaceX at the same time, that buying is happening in a market where the available supply is limited. That does not guarantee the price goes up, but it can add pressure, especially before the insider selling window opens. So that is the buying side. Now pause there, because the selling side matters more. When insiders own shares before a company goes public, they normally cannot sell the day it lists. There is a lockup, a waiting period. For about 40 years, the standard has been 180 days. SpaceX structured its lockup differently. It lets some insiders sell 20% of their shares 2 trading days after the first earnings report, which is expected in late July or early August. That puts the first wave of insider selling near the end of August, after the index buying event may already have passed. More unlocks follow through the fall, and a larger block after the September quarter. And the people selling are not strangers to this company. They are employees and early backers who may have waited years for this moment. Be honest. If you had waited 10 years to turn paper wealth into real money, and suddenly you could sell part of it after the biggest initial public offering in history, would you just sit there quietly? One person sits out the early waves. Elon Musk agreed to hold his stake for at least 366 days. The employees and early backers do not. So here is who is on the other side of that selling. Morningstar values SpaceX at $780 billion. Even after the drop, the market is pricing it far above that. And the funds that build those models for a living can see the gap. By late August, the question is simple. Who is willing to buy from the insiders? Active fund managers can say no. If they think SpaceX is still too expensive, they can stay away. NASDAQ-100 funds and exchange-traded funds are different. Their big buying moment comes when SpaceX enters the index, because their job is to copy the index. So, if insiders start selling after that, the biggest automatic buyers may already have done their buying, and that is the risk. The first week fall was just the market reacting to a stock that ran too far, too fast. The real test comes later when the selling window opens and somebody has to be on the other side. And this is the part that should bother you. You do not have to buy a single share of SpaceX directly to end up exposed to it. If there is a NASDAQ-100 fund or QQQ inside your 401k, your IRA, or your kid's 529, that fund may add SpaceX when it joins the index. That decision is not made because you sat down and chose SpaceX. It happens because the fund tracks the NASDAQ-100. Go look at what is actually in your retirement account. If you find a NASDAQ-100 fund or QQQ in there, you are about to own a piece of this, whether you meant to or not. Everyone is watching the price bounce around. Almost no one is watching the calendar. And the calendar is what decides who is holding the shares when the insiders walk out. Now, you might think the drop already happened, so the damage is done. Maybe. But the lockup-driven selling is a separate event. It does not need the same headlines. It only needs the calendar. This is not a guarantee SpaceX falls again on a particular day. It is the structure. And the structure still has two forced events left to run. Strip away the rocket and there is nothing new here. Buyers brought in up front. Sellers released on a delay. And retirement money left holding the difference. It is the oldest move on Wall Street, wearing a spacesuit this time. So go back to June 12th, the NASDAQ ceremony, the celebration, the trillionaire headline. That public moment has already passed. The stock has already had its first fall, but the insider selling window is still ahead.